For more analysis on the Fed's move, CGTN's Sean Callebs spoke to Anthony Chan, former chief economist with JPMorgan Chase, and here is his take on Jerome Powell's comments from Wednesday.
He really took a lot of the uncertainty out. He actually went out of his way to say that he wanted to be as transparent as he could. He basically telegraphed a 25 basis points increase at the next meeting. And so this is good because now that a silly debate of whether it's 25 or 50 can go away, the markets can calm themselves and just expect a simple 25 basis point increase.
Yeah, so when they have time to build in, the market does not like to be surprised. We do have this proposed date and the 25 basis point hike. Is that going to be enough? What are the markets going to do until this actually is pushed through? And there are going to be some that say that simply doesn't go far enough.
Well, I think that Chair Powell actually took care of that angle also. What he said today was that even though he's proposing 25 basis points, because he's going to be watching the data, the Fed's going to be data dependent, and if they have to adjust and do maybe 50 basis points at a future meeting, they would not hesitate. They said that the Federal Reserve pivoted in December, and they won't hesitate to pivot into a more aggressive tightening stance if they need to moving forward. So I think that was addressed also.
I thought it was interesting last night that Biden spent so much time tackling inflation, not really focusing on Build Back Better and some of the other climate change, some of the other really cornerstones of his administration up to this point. We know that the White House likes to lean on the Fed, at least the last 4 years. It certainly tried to under the previous president. To what degree do those White House comments actually have an effect on the Fed?
I think the Federal Reserve wanted to tighten for quite some time. There's no question. Now, of course, they have the blessings of the administration. So they certainly are being a little bit more aggressive and more assertive in saying that they wanted to raise rates. But I think that when you look at the inflation numbers that we've seen, certainly over the last 6-9 months, there's no question that they actually have to raise rates. The only question is how aggressive they're going to be. My suspicion is still, and it has been all along, that the Federal Reserve this year, in the next 7 meetings, will raise rates anywhere from 6 to 7 times at 25 basis points. Of course, they can be more aggressive and increase at 50 basis points somewhere along the way if conditions change. But right now, 25 basis points at every meeting is a reasonable forecast, I think. I think if they miss one, not a big deal. But I think that my base case scenario is 25 basis points at each of the next 7 policy meetings between now and the end of the year.
Interesting. Let's talk about the Ukrainian crisis as well. Powell also talked about that, and that's the real wild card out there. That could really wreak havoc on the global economy.
Well, I think there's no question that it's going to have a negative impact. I hear a lot of people saying that there's a lot of uncertainty about what's happening in Ukraine and Russia and the conflict. To me, it's not uncertain at all. You got to ask the question, is this conflict going to lower inflation? The answer is clearly not. Is it going to raise inflationary pressures? The answer is clearly yes. So that's not uncertain to me. We're going to see higher inflation, and therefore, that's why I think the Federal Reserve has to be somewhat more assertive in raising interest rates at every meeting, because inflationary pressures, because of this conflict, will be higher, not lower than they otherwise would have been.
Oh, I think that most financial minds certainly agree with you, but the big question is, could it push inflation much higher than anybody thought, or could it have a very chilling effect, much more so than people think at this point? Now, we are seeing central banks sort of flex their muscle with Russia, including the FOMC. Do you think this is going to continue to put pressure on Putin, and if so, how so?
Oh, I think it will. I mean, anytime you take 40 to 50% of their foreign exchange reserves and you freeze them, that's certainly going to be a big dampener. When you think about how much money they're spending every single day on the war that's now taking longer than they anticipated, that's certainly putting a pinch on it. When you take into account the fact that even though we haven't imposed any sanctions on the purchase of oil from Russia, they export about 5 million barrels of oil per day. And then you have some countries out there saying they simply won't buy it, even with the lack of sanctions on the oil. All that is going to put pressure on them, as well as putting pressure on OPEC to actually start to increase output and using up some of their excess capacity